Hey everyone, welcome back to the channel. Today, we're diving into one of the most controversial and fascinating stories in the AI defense space, Bigbear.ai, ticker symbol BBAI. Now, this stock has done something that very few small caps ever pull off. It's up over 400% in the past year. But here's the question every smart investor should be asking. Is this an undervalued defense tech gem that the market's finally waking up to? Or just another AI hype train that's running out of track? Because here's the thing. While Big Bear's artificial intelligence is quietly running inside U.S. defense systems, border control networks, and even airport security platforms, its financial statements tell a very different story. And that story isn't nearly as exciting. I've seen this kind of setup before. Huge hype, massive runs, and then a harsh return to reality. So today, let's unpack the real situation. What's behind the surge, where the weaknesses are hiding, and what I'm personally watching to figure out whether Bigbear.ai is the next Palantir or the next pipe dream ready to collapse. Let's get right into it. Bigbear.ai isn't your typical AI company chasing headlines or launching chatbots. They're not trying to compete with OpenAI or Anthropic. Instead, Big Bear's focus is mission-critical artificial intelligence, the kind that powers defense intelligence systems, national security, and real-time decision-making tools for the U.S. government, the Air Force, and the NSA. That's not a small client list, that's serious pedigree. The company was founded in 2021 and is based out of Columbia, Maryland. Their entire mission is to help organizations actually use AI, not just talk about it. They build and deploy systems that integrate AI into logistics, identity verification, border security, and infrastructure monitoring. See, when most people picture AI companies, they imagine flashy startups, viral demos, and CEOs talking about the future of intelligence. But Big Bear? They're behind the curtain, building tools that operate in places most of us will never even see. Their software already supports some of the most sensitive and high-stakes operations out there. Whether it's protecting airports, securing data pipelines, or helping government agencies analyze threats, Big Bear's AI is being used where failure isn't an option. And that right there is what gives the company credibility. They're not built on hype. They're built on trust. But Big Bear's ambitions go beyond just defense. They've also started expanding into commercial sectors, adapting their military-grade AI for things like digital identity, facial recognition, and biometric verification. For example, their TrueFace software can verify identities with 99% accuracy, performing both one-to-one and one-to-many facial matches in real time. Then there's Veriscan, which helps ports and airports with high-speed, secure traveler authentication. And don't forget Panjang, their threat detection platform that enhances airport security and baggage screening. It combines AI, machine vision, and real-time decision systems to detect potential risks faster and more accurately. So, if you break it down in simple terms, Big Bear built tech so advanced that it's trusted by the U.S. military, and now they're commercializing that same technology for the rest of the world. This is the core strength of their story. The idea that they're already deployed where reliability matters most. That's what separates them from hundreds of smaller AI startups that still don't have a proven use case. Now, let's talk numbers, because that's where things get a lot more complicated. Big Bear's stock currently trades around $7.69, down from its February high of $10.36. Still, year-to-date, it's up over 70%, and over the past 12 months, it's soared roughly 400%. Those are eye-popping returns. But when you see that kind of parabolic move, it's always worth asking why and how sustainable it really is. Because beneath the price chart, the company's financials show a much tougher reality. Revenue has been declining, losses are widening, and the company has been diluting its shares at a rapid pace. In fact, as of mid-2025, Big Bear has about 370 million shares outstanding, nearly 50% more than it had at the end of 2024. That's a big deal. For shareholders, dilution means your piece of the company just got smaller. Each share now represents less ownership and less claim on future earnings. And here's the bigger issue. It signals that Big Bear has been raising money by issuing new stock rather than generating cash through operations. In other words, they're keeping the lights on not by making more money, but by printing more shares. That's not a sustainable strategy long-term. Let's look at another major concern, revenue dependency. In their latest filings, Big Bear management mentioned that revenue fell because of uncertainty in some Army programs. That's critical because these contracts make up the bulk of their revenue. In fact, just 4 customers were responsible for more than half of their total revenue in 2024. That kind of customer concentration is dangerous. When your income depends on a handful of large clients, even a single contract delay or cancellation can shake the entire business. It's a level of vulnerability that investors can't ignore. And because of all this uncertainty, from the Army program delays to the ongoing dilution, Big Bear's management decided to pull their EBITDA guidance for the year. Now, if you followed markets for a while, you know that when a company withdraws its financial guidance, Wall Street absolutely hates it. It's basically management saying, "We don't know what's coming next." That lack of visibility often triggers volatility and, more importantly, a loss of investor confidence. When leadership is unsure about profitability and cash flow, it usually means execution risk is high and predictability is low. So, where does that leave us? Well, if you strip away the hype and focus purely on fundamentals, Bigbear.ai is a high-risk, high-reward story. They have government trust, incredible technology, and a growing commercial presence. But they also have thinning margins, customer concentration risk, and financial instability that could weigh on growth. According to a group of 5 Wall Street analysts, Big Bear currently holds a moderate buy rating. The average price target is around $8, which implies roughly 4% upside from current levels. That's not exactly a screaming buy signal, more like cautious optimism. Analysts seem to believe in the long-term potential of the company, but are also clearly aware of the short-term headwinds. Here's the bottom line. Bigbear.ai is one of those companies sitting right at the intersection of innovation and uncertainty. On one hand, they've built AI systems trusted by the U.S. military, and that alone is a strong foundation. On the other hand, the financial side of the business tells a story of heavy dilution, slower growth, and contract dependence that could easily trip them up if anything goes wrong. So, yes, the upside is real, but the risks? They're just as real, maybe even more so. If Big Bear manages to stabilize their revenue, secure more diversified contracts, and improve profitability, the stock could continue climbing. But if those challenges persist, or if new funding rounds further dilute shareholders, this could just as easily turn into another speculative AI play that burns out once the hype fades. So, what do you think? Is Bigbear.ai a misunderstood AI powerhouse that's only getting started, or a small cap bubble waiting to burst? Drop your thoughts in the comments below. I'd love to hear your take. And if you enjoyed this deep dive, don't forget to like, subscribe, and hit the bell icon so you never miss the next one. It helps the channel grow, and it helps more people discover these kinds of breakdowns. Thanks so much for watching. I'll catch you in the next video. This is not financial advice.